Okay. All right, let's just start addressing this trade idea here that I had on pound Aussie dollar last week, and then we go from there. Okay, all good. Right, so the main idea behind this trade was that we had a pullback somewhere around those support levels that we had previously seen. We had test once, we had test twice, and we had test like as a resistance. Now it became support. Just very basic technical stuff that I think most of you guys know about this. Just basic things. But primarily, why it didn't work is because we got triggered. But the whole idea, the whole concept behind it, the fundamental, the whole macro was right, because as we can see, it did work in our favor. Okay, the only thing that didn't was we've missed for some points here the entry. Okay, on those situations, you could come, and have a look on the, let's say, 15 minutes. What? Why is it not working? Oh, there we go. Come to the 15 minutes and let's say, have a look on here that we have, a pullback, a minor pullback, well, a major pullback on the 15 minutes, but a minor pullback on the 1 hour or so. But indeed it broke, the market was trending down. This is not SMC or any other sort of kind that you may thinking. This is just basically market structure, okay? Because if we look here, this was the top, okay, and then it broke down the top. So then the bottom was here or here, okay. I'm going to choose this one because it feels like a border, feel more like a border here. Then we broke down the border, and then we've came back from an uptrend. Now we are switching to where's my pen? So from an uptrend that we are forming, because we were breaking higher highs, we didn't break these high, of course, because if we look to the very, very macro, very major aspect, we had a pullback here, and then up, and then down, and then up, and then he broke down here, and then came back down. So the actual thing was to broke down here. Okay, but this would be more to 1 hour already, having a look on the 15 minutes. Do you guys get me what I'm saying? I think it's kind of clear, right? But then what basically happened here is that if we look a little bit more micro, then let me take off these drawings. And if we look at here, we did had a breakdown as well. And then we had another breakdown here. So break comes. So here you can count as this one, or you can count as this one. I'm going to count as this one here. And then we had another break. And then we had another break. And then now you had two options, right? You have either this wick here as your high, or you have this wick here as your high. I'm going to come down as this one, because this one feels like too minor. Sorry, not this one. This one feels like too minor. It just broke down, barely broke, and then it came up. So most probably I'm going to count down as this one. Okay. So then what it had, it was we broke down here, and then we came back down on this area. So the whole thing that I was trying to explain is that we did have a pullback on here. That was a good entry point, and then from that pullback we could look at to areas that have been previously been support or resistance. So it feels like we do have some contest around here. Let me grab the pen. White. So we did have one. Oopsie, that's not what it was. Oh, there we go. So we did have one here, we did have one here, and then it hold for quite long time here, here as well, here as well, you know, here. So this area feels like it's a good area. Okay, so what are we going to do is we're just going to take a line, horizontal line, place somewhere here. So that would be my second best option to entry point. Okay, and then this just plays out as a normal trade. Okay, so pullback, entry here, and then you calculate your stop loss and everything on ATR that I've explained to you guys already, and should be working perfectly fine. Let's see how much this trade would give to us. So that would be a long position. So let me take this off. So this one would be a long position here, let's say. Very minor drawdown. How much ATR was there? It was 108. So if we get the calculator, so if we get 108 times 6, we're going to have 648. So 648 of stop loss, 648, 650. Let's call 50. Okay. And at least 1.8 of take profit. So 1.8 would be here. Okay. But we do have some higher highs. And as we're expecting a continuation of the uptrend, then what we can do is we can put it up on the top of the range for 2%, for 2% profit. And once it hit there, you know, you can close 50%. So that's going to close 1%, and you still remain another 1% running. Okay, so that should look like this. Okay, so when the trade comes to another 2%, you can close another 50%, then you're going to close another 1%. So you just making slowly getting off from your trade. But that's a very good way to manage your risk as well, while you're paying yourself as well. But primarily, the whole idea was that the pound would be stronger because of the pushback on the rate cut, and for a hawkish approach to the monetary policy. As of Australia did had a sort of hawkish approach as well, did push back a little bit, but investors are believing that the pound will have a more higher holding period than the Australian dollar. Therefore, this is why we're having these moves, Another second possibly entry point would be on this 50 minutes consolidation here. Okay, I know for some of you may not seem not to be clear, but we do have another consolidation here. Let me take off this big one here. So, you could enter as well on here with the same concept. If you find easier to find ranges, that's perfect. If you find easy to find to get pullbacks, that's really good. You can work it out either ways. All right. So that's just a recap of my trade. I haven't took this trade on the pound dollar, Australian dollar, on the Kiwi or Aussie dollar. So unfortunately, we didn't reach the best entry point. But the whole concept, was pretty much very clear. You guys have any questions regarding this idea here, or is everything clear? Why we move to the other one? Oh, good. Okay, no questions. Right. So EUR/CHF, I got stopped out. I got stopped out with a 1% stop. Primarily, my stop was somewhere around here, and then I was like, no, this is too short. And then what I've done is I've just put it bigger. I've closed it up some lots, because then it would be too much of percentage. That's okay. It's still up 1% as of beginning of this year, because we do have a nice trade running on the pound dollar. Okay, so the trade's still running. Very, very good. Nothing to worry about this trade. I'm still expecting a little bit more pullback somewhere around those lines here to short another position. Okay, I'm going to keep holding this one and then short another one. Okay, but here, coming back to Euro CHF, and we did have a stop loss there. Let's have a look on why we did have a stop loss. Right. So the primarily reason here was that euro got much stronger than the CHF. What I found is that investors are not looking to Swiss franc at the moment because the rates are too low now. What are they looking is that, we did have some speakers coming from ECB, the European Central Bank, and it was very hawkish, okay? And therefore it made these strong bullish momentum, I would say, sort of momentum, but uptrend starts, okay? We went off from these ranging, okay, that I thought would be the range, the top of the range, but indeed it wasn't. And then we went even further up, okay? So therefore we got stopped out here. Now, euro dollar, it is a very good trade still. Okay, I have a short position somewhere around this area here, if I'm not wrong. I most probably do. Let me check. Let me open my MetaTrader. Just a second. Yeah, let me put in 1 hour. Yeah, so my position is up here. So still pretty good position, nothing to worry about. I'm gonna keep it in there. My pound dollar position is still running without any problems. So we're just gonna wait for still even higher pushback to get in another position. So same goes for euro dollar. Okay, if we get the Fibonacci here, what are we looking? We're looking at 38 at the moment. Okay, so 61 would be even higher. But in simple concept, okay, let's just have a simple concept here. Let's go for 15 minutes. I like 15 minutes charts. So we did have actually, let's go 1 hour first. We did have a very trendy, okay, very, very easy sort of trending market. All right, so not much of a crazy one here. Let me just hide this one. Can I hide for a second? Yes. So if we get, let me get my pen. Okay, this one. Cool. So if we get, on a simple vision here, while we're looking a little bit out of the spectrum, we know that there is a downtrend here. Okay, of course there is a downtrend because the market is coming down. It started here and now it is right now on here. So there is a drop. That's nothing new. But once we look to the structure of this, breaks, this structure of this downtrend, we can basically see that we had a bottom here that has been broken. Then it went up for a pullback. Okay. Now, secondly, this bottom that was the bottom of the down leg now gets broken again. Okay, so it gets broken here, or you can say, if you think that this is too little, you can say here. It doesn't matter. You can pick either here or here or here. I'm gonna pick this one here. Okay, just because it feels more realistic to me, as it actually did went through, and not only a tiny bit as this one. You can't even see it properly. So I'm just gonna draw a line here. And then we did have this pushback down, and then we had a pullback up. So now what are we working here? So this was our top. This one is our this one is our top. Sorry, this one is our top. Okay, and then now we come back again. We break these lows. Then we went up again, and now we went up and went down again. So we did broke these downs. So basically, we still on a downtrend. Okay, in technical perspectives, it doesn't have any reasons for you to long it at the moment. Okay, now this one as well. You can count this one, or either you can count this one. Either way will work. Okay, because the concept will be the same. We're looking for a pullback leg. Okay. And if we get the ruler, okay, we just get it here. This one. So this pullback, let's have a look on this pullback. This pullback had 1% up. Okay, cool. 1% up. This one had, let's call it 90% up, 0.90. Okay. What are we expecting? So let me have a look again. So this one here that we had 1%. This one here we had 0.8%, and this one here we had 1%. So 2 plus 1 is 2, plus 8 is 2.8. So if we get the calculator out, calculator, 2.8 divided by 3, that's going to be 0.93. So what are we looking here? We're looking at for somewhere around 0.93% up. Okay, 0.93. 0.93% up. So somewhere around those lines here, that this is the average. I'm not saying that the exactly point of 0.93% the market will go down. No, this is I don't have a crystal ball, okay, and this is just an analysis. But this is the average that the market have been pull backing in the last basically how many days? Let me see. 15 days. Okay, around 15 to 20 days. So it is a very short term of data, collection of data, but it still does work sometimes. Okay. Now, when we get somewhere, when we do some analysis like this, I always like to use the Fibonacci. So if we just put the Fibonacci here, we're looking at 0.93, somewhere around. Yeah, somewhere around the 61. So it does match quite well, okay? And if we look for some, let me take this off. If we look for some area of support, we can find somewhere around here, okay? So here, the price had a little bit of subjection there. So that's pretty good. This is a pretty good area, okay? So what I will do, I will watch the price coming back to this area and see how this will react on that level around 108, 108.3. Okay, so around 108.2 to 108.4. Actually, I'm gonna just make it bigger, a bigger range because it's easier to watch then. 108.2, 108.4. A little bit better there to wait for the market to pull back. So what I'm expecting on the euro dollar is, where is that? Here. Coming back to this area somewhere, and then continuation down to the 107 target for the first quarter. So if that actually comes back and more towards the end of the February month, month, that will work perfectly with my target of 107, okay? Because then we have another month to rally down. And after that, most probably we will continue to go down until May, because now we have to remember. So my target for 107 was because of the central bank, the divergency of the central banks, and Fed would cut interest rates would cut the rates on March, but now they won't cut on March, because if we look at the CMA FAD Watch 2, let me open it for you guys. If we look at here, right, so this is March, okay? I'm just going to do this analysis again. I know you guys are tired, but this is always good to come back and look at it. So this is March, okay? We can see here 20th of March. 2-3 weeks ago, okay, here, 525, okay. A month ago, 8th of January, 62.6% of the market was expecting a cut. Okay. So when you look to this, okay, this is good because if they do actually cut on March, then the US dollar will be weaker from there. But the situation have changed, and once we look now to the March, what is happening here is that only 34%, only 18.5% of the market expect a cut from the Fed on 20th of March. So that was a big change, okay, from coming all the way from 62.6 now to 18.5%, and keep changing it because, a day ago we were 19, a week ago we were 38, and then a month ago we were 62. So that's pretty good. Okay, this is pretty good because it's showing us that the market expects the Fed to not cut in March. And when we had the I forgot the name, when we had the MP, the monetary policy from the Fed on last week, on last week on I think it was Thursday or Friday, depends where you are. The Fed, Jerome Powell has said like it's too early to cut rates on March. It may differ from what the market is expecting and what actually the Fed will be doing, but it's too early to cut the rates on there. So then the market look at it and says, okay, so we need to postpone. Let's say we need to postpone to another month. Okay, and then now when we look to the another month to May, we can actually see that yes, now 55, let's call it 55% of the market, it is expecting a cut. Okay, even like 10% is expecting more than 25 is expecting 50 base points cut. Well, if that happens, US dollar is done for this year. Okay, most probably. Let me get some water here. But I don't think 50 base points would be. I don't think this. I think this is too much. 50 base points. Only 10% of the market is pricing. It can happen. We can't rule it out. But it's not on the scenario. If they cut, they will cut 25%. That it's the most probability where the most probable scenario is at the moment. Okay, so let's have a look now at the numbers. Okay, if you look at this line, to this row here, a month ago, only 38.3% of the market was expecting a 25 base points cut. A week ago, 60% was expecting. All right, and then 1 day ago, yesterday was 55, and now it's 54.9, so 55 again. So only 0.5% change it here. But what is pretty interesting here is that most of the people actually was expecting a 50 base points cut. If we look to this line here, let me change the color. Again, red. So 53.8% of the market a month ago was expecting 50 base points. Okay. And then 34, and then 11, and then now 10. Why is that? Because yes, this was counting 25 basis points plus 25 basis points of March that they won't be doing on March. So people think that they will do 50 on May. But why they can't do that? Well, because if they cut too much, then the whole thing can happen again because they're sustaining a very, not very low, but let's call it a low inflation from where they came into now. They are sustaining a good inflation basis and, slowly coming down, continue to coming down. But what Jerome Powell wants is Jerome Powell wants even lower inflation, even closer to 2% to actually come in and say, okay, now we're going to cut the rates. But remember, this will happen this year. Okay, it's very, very probable that this will actually happen this year. So there's nowhere to run. So there's only one thing. Collect the data and actually see and analyze when this can possibly happen. And the most probable one is on 1st of May. And if we look to June, we have another 25 basis points. 50% of the market is expecting another 25, and then July, if it loads, another, quite indecisive here. 40% is expecting no cuts. 45% is expecting another 25. So that's 75 base point cuts in 3 months. So basically, in a quarter, they've cut it every month. I'm not sure if they will do this. Okay, I'm not sure. Everything can happen, but probably not. We need to watch the data first. But May, 53.2% is expecting a cut. Okay, and then if that actually happens, this would be pretty good for euro dollar to go up. Okay, so this is basically my analysis. Coming back here to somewhere around May, and then after May, when the first cut happens, euro gets the strength, and then dollar loses the strength, and then euro dollar go up. Now, someone asked a question. Let's have a look. Can you guys hear me all right? Because I think my headphones just lost the battery, just died. What are your thoughts on the RBA Gov block speaks? I think I've talked about that on Tuesday, didn't I? Was you here, Kamala, Tuesday? Hello? No? I mean, we can have a look again, but what you can easily do is you can go to your YouTube channel, type in ACY Securities, go here. Oh, okay. You was late that day. Okay, so what you do is, just so I don't go through again, what you can do is you can watch this video here. Okay, because on here, if you see, let me show you. I break down everything. Okay, I break down everything of the monetary policy. So if you just want to step to that point, you can, or if you want to watch the whole video, you can as well. It's pretty good there. So it's all here. So talking about everything, and that's RBA. Okay, so I'm going to send it up the link here on the chat. So if anyone want to have a look on the RBA, you can just watch the video, give us a thumbs up on there, subscribe to the channel. Not a problem. Okay, cool. Now let's have a look on gold. Gold is still doing what I've thought he would do. Now that's pretty interesting here, guys. Pretty interesting. Let's jump for 15 minutes. Remember, I told you have just. What did they say about the shirt? Oh yeah, the shirt. No, we can't send it because it's only for people that work there. Actually, I didn't know that. So it's only for people that that work in ACY. We get the shirt once we get employed, and then we use that shirt. So sorry for that, man. Now let's have a look on gold here. But that would be a good idea if they could, sell it out. It would be good. Anyways, so let's have a look on gold. This is 1 hour. I want to go for 15 minutes. What are you guys looking at gold? Are you guys looking too long? Are you guys looking too short? What is the main idea for you all? That's a good question, Steve. I'm going to touch base on the economic calendar in just 5 minutes. I'm just going to finish gold first. But thanks for the question, man. Appreciate that. Okay, so if we look to gold here, guys, pretty simple. Okay, remember, I've just explained to you all that, my bias on gold is short, as you can see here, pull back and now coming back short. And this is a good moment for me looking at, in my perspective, probably going to add a short position on my portfolio. Why is that? Well, simple. Let's hide this one. If we get here, right, we had a up move, right? So from a down move, actually, this is not correct. Like that. So from a down point, we had the bottom, and then from the bottom we had the top. Okay. If we get Fibonacci from top to bottom, we nearly went to 61%. Okay, nearly. Now, there's two things that can happen here that I'm gonna watch. Remember, I've always say that the market is attracted to the boxes. Okay, so we have one box here and we have another box here. Okay. Now, my bias is that the market will come to this big box down here. Okay, so if we look like that, let me get the arrow again. Here. I had here, and then there, and then there, then here. All right, so somewhere around there. So in my opinion, now we did have a pullback. We finalized the pullback here on this move here. So if we look, we did broke the bottom. Okay, so let me grab this. We had, let me take this off. So we had a bottom here, right? Then a pullback, but the actual pullback broke the top, so broke the high. Okay, so then it broke the high, it came back, there was a pullback there, and then broke the high again, and then pull back, and then break the high again, and then pull back. But then also it was coming back to continue the uptrend, because we were like, basically we were like this. We were going down, going down, going up, going down, going up, and then coming back for pullback, go up again, pull back, go up again, pull back. And then when the market was coming back to continue to somewhere around here, it lost interest. And what did actually happen? They broke the actual bottom here of this pullback. Okay, so it just broke the bottom. Okay, just break it. So now what we can wait is a pullback to somewhere of those levels, to maybe find a good spot to short the market. All right. So again, remember, we do have the box here. Okay, so that's a very small, or it can go for a prolonged trade. So the best option, of course, would be somewhere around here. Okay, the best option would be somewhere around here. But the stop loss then is going to be too big. So that's going to be 1-to-1. And we don't want 1-to-1. We don't want 1% stop to 1% gain. I've mentioned already, I've shown you the mathematics statistic that 1-to-1 risk reward, it's not worth it. In the long run, it doesn't work. In a few weeks, yeah, it can work, but as traders, we want something that's going to run for a long period. We don't want to be profitable for a week and then lose money on the other week. We need to be profitable for both weeks, and then 3 weeks, and then 4 weeks, and then a month, and then 2 months, and 3 months, 1 year, 10 years, and go from that. So this is what I'm saying. Macro analysis will always be the core. Okay, let me drink some water. I've took some creatine today. I'm going crazy because it's making me drinking so much water. Okay, coming back. So now if we get the Fibonacci on this level here, okay, well, now this is our top, okay, and this is our bottom, because the market is coming back and it's pushing very strong. So this is our bottom here. So if we get a Fibonacci now, from the top to bottom, we can see that this area is a good area, all right? Especially, of course, the 61%, but don't be attached to the 61%, all right? If you know, if the market is showing some retracement on somewhere around 50, 38, then that's good. You know, that's a good option. That's a good option to already look at shorting. What do we wait now? I'm gonna wait. Hello, hello, guys. Can you guys hear me? Cool. All right, that's good because my phone's just died. So now coming back here. So what do we wait here is okay, so down and then up somewhere around here and then a continuation down. Okay, so this is what I'm expecting. We can see that there is a lot of strength at this moment. So just wait, just wait for the best opportunity. If you, of course, you have your own trading system. So if you want to put some, I don't know, support lines, whatever indicators you may use, that's fine. That's completely for you. But I'm just showing the structure has changed, from an uptrend to a downtrend, and the macro is still to the downtrend. So therefore, I'm looking to short gold somewhere around those levels. I'm going to wait. I'm going to be patient. And once we have an opportunity, then I'm going to be looking to short it. Okay. So this is my analysis for gold. And of course, if we can break this structure, bigger structure here, that's going to be perfect, because we can continue to hold it to trade. But if we come somewhere here, and we can't break these lows, because this is the next stop, this is going to be the next stop. If we can't break those lows, then it's something to keep attention, because maybe it may be a bigger pullback to coming back. But the whole 1 hour of structure feels like we are actually coming down now. Down, pullback, and now down again. Even on the 1 hour, we did had a break of structure here. So most probably, yeah, we will continue to go down. Okay, so that's my view on gold. Now, let's have a look on Western Tex oil. Okay, so it's still ranging here. I don't know if any of you guys trade oil, but let me grab it here. So it's still pretty ranging. Not much happening. Most probably we will keep. We will come down somewhere around here. That's going to be good. So then I can fill it up my car with fresh gas and cheaper gas. I always, as a trader, I always look to WTI charts to see when the gas price will go up or down. I think this is smart, isn't it? Because then I sort of like a society cheating, because I know when I can get a cheaper gas. But but that's just me. So on here, I don't think much will continue to happen. So most probably we will have a somewhere around down here to these levels, maybe attracted, maybe, but maybe probably continue to be on this range. But it's still very expensive. Okay, it's still very expensive though, $73. All right, if we look to the past, let me clear this. If we look to the past, the actual average price is somewhere around 60. Okay, so if we get here from top to bottom, it's around somewhere around here, 67. Okay, so maybe it can come down to these levels here. That's going to be very good then. Okay, but primarily short buyers on oil. Now, DXY, just doing what I've mentioned last week that it would do. Okay, it's not anything. It's nothing crazy. One thing that I want you guys to know is I'm not looking at the chart and predicting what's happened with the candles. Okay, I'm not doing this. What I'm doing here is I'm looking to the charts and seeing how the macro is reflecting the charts. And I look to the macro and then I say, okay, this may happen based on a data or someone else that can come out. Okay. But you can't look to a chart and say, okay, this, of course, this here, this price broke that, this will happen. No, I'm looking to the macro first to know my direction, and then I use technical analysis just to refine a entry point, or maybe, something. All right, sorry guys. So sorry for that, because my phone's just my what's the name? My headphones just died. I'm just going to continue like that because there's nothing to show at the moment. But I was looking at today's data that I was discussing. If you haven't watched my YouTube video yet, I've made a YouTube video regarding today's that came out, China. Let me find, and then I can send on the chat. Okay, here. So we did had CPI and PPI, all right? So the PPI came higher than expected, and the CPI came lower than expected. So that's a pretty interesting sort of data, because most of the times what happened is the back in business now. Because most of the times what happened is the PPI come higher, and the CPI come higher as well, because we did have CPI for January, and we did have PPI for January as well, year over year. All right, meaning year over year. So basically, if the inflation rose for the producer part of the business, why they didn't put the inflation charging on the product as well, on the goods. So that's pretty interesting. Now I don't know so much how this will develop, but if we look at the Aussie dollar against US dollar, Aussie dollar against greenback, it did had sort of negative impact on the market. And indeed, I was already looking for shorting the Aussie dollar against US dollar, not only for China, but actually more because of the Australian RBA, as well as the US dollar. So lots of strength coming out for US dollar and lots of weakness coming out for Australian dollar, because we did had Tuesday. Did you show your screen? No, I'm not sharing my screen yet. I'm gonna try to share it now. I'm just looking at there we go. So when we look at here, we did have this, but what I was talking about is the Australian dollar. So I've stated these last Tuesday. Okay, let me grab my pen here. I think I've mentioned when the price was somewhere. No, not here. It was here. Okay, I was like, yeah, maybe it is a good opportunity. Even someone on the chat mentioned about 65.3. I think someone's told about 65.3 would be the perfect spot or something like that. Well, congratulations for them, because that was actually a good call. Okay, that was a very good call. So that was indeed a good opportunity there. Now what I'm looking is continuation downtrend here. Okay, most likely, because the Australian dollar is losing its strength as the US dollar is, getting stronger. Okay, so this is my view. Hey, we react negatively on the Australian dollar. So answering your question now, I forgot your name. Let me have a look. Was that Steve? No. Yeah, Steve. So answering your question now, Steve. Is it clear? Now, coming back to the economic calendar, just to wrap up the week, tomorrow we're gonna have a few things, okay, but only the importance is more towards the speakers, because if we look here, we do have German CPI. Okay, that's a very important one, of course. But we do have Barking speaking, not a major vote, but he does vote because he's from the FOMC, the Federal Open Market Committee. So good to know. Aussie CAD. Yeah, we can have a look on Aussie CAD. Did I mention something about Aussie CAD last few days? So I think I was looking to short it, wasn't I? Let me have a look on market. DXM wise, retail positioning wise, is more short than long. So, good probabilities to shorting here. It's good. This pullback would be very good to short it, but didn't have the opportunity. Now, coming back here. So, he's not a major one. This is why he's only one star, but, important as well. Because, he may be talking about what are they talking inside of the FOMC, what are the other members, the most important ones are talking about. Then it's good to hear them, okay? And if they talk about something like this can, trick a little bit the market, but not too much. So that's nothing to worry about it. We're going to have Lane speaking. That's very important for ECB. We're going to have as well the Bank of England Monetary Policy Committee member Mann speaking as well, and of course jobless claims. Okay. Jobless claims have been pretty tricky few weeks ago, because the market, it's not looking to these. The market is looking more to the NFP. It's looking more to the CPI of US, because this is what the central bank is looking. Okay, how is the market stable, and unemployment rate. Okay, so this is pretty much it. This is pretty much it from me today. Do you guys have any questions regarding it? Do you want me to look at any specific pair or something like that? No. USD CHF. USD CHF, as I've mentioned, USD is strong, CHF is losing power, so most probably we will continue to trend higher. Even though we had, I think it was MUFG long on USD CHF. Okay, so this pullback was a good opportunity again to have a adding some long positions. If we look at the USD CHF here, we can have a look on what's the quantum side of the things are saying. The USD GXM had a close to a flip, very, very close. Okay, very, very close. So that's, I'm gonna watch out, because if it flips to lower people buying, that's gonna be pretty good. Okay, if you look to the 1 hour, I know, like you may think, okay, this is, the market have been gone too much up now. Well, my friend, the market can continue to go up. It's not gonna care. It's not gonna care. All right. So, in my opinion, USD CHF continuation, a little bit of a down move. Where is it? Somewhere around these levels here. I think this is going to be too much, actually. This is going to be very good, because you have a support right here, but probably somewhere around here and then up. GBP CAD. I've mentioned about GBP CAD being a short, right?
because of the CAD always, if we look, actually, let me see if I can do something here. I can just push USD CAD. Okay. If we look at USD CAD, I even have my target here. Yeah, it's slowly going to. If you look at USD CAD, it's very, very, very much of the times ranging. Okay. Does anyone know why? Why do you think it's most of the times like that, ranging? 3 out of 4 times it's ranging. Do you have any questions? Sorry, do you have any clues? Yes, oil prices. Yes, correct. Because there is this is one of the things. Yes, but there's another thing as well. Very susceptible of oil changes, right? Because if we look here, let me put these on a line. We have in yellow, we have oil prices, and blue, we have USD CAD prices. And even if we add DXI, it's going to be another blue. Let me change the color. Let me put it red. Yeah, that's a good contrast. It's a mix of those three, basically. Okay, it's a mix of oil, it's a mix of USD, and it's a mix of Canadian dollar. Canada is very, very big. It's huge on oil, right? But as well, it's a big partner of US. Therefore, the BOP, the balance of payment between those countries, are very big, and they are buying and selling for each others on Canadian dollars, US dollars, and so forth. So it's always like, okay, Canada is stronger now because they hold more oil. They are selling more oil to US. Okay, US is stronger now because of monetary policy. Okay, Canada now is stronger because they've bought it lots of, so it's always between those things. So the market doesn't have some trend, some continuation to go. But majority, yes, correlated to oil prices. Okay, so that's a very good take there. It's just good so you guys can see here. Again, on yellow we have orange, I don't know. We have oil prices. On blue we have USD CAD prices, and on red we have US dollar index. Okay, let me take this off now. But let's come back to the GBP CAD. On the GBP card. GBP CAD. Okay. Well, now let's have a look on here. Just 1 second. Now we're very close to get a flip on the DXM. Well, we already had a flip to the majority short and the minority long. Looking at these, I don't believe there is a good potential to long on this market. Okay, there may be a possibility of a continuation to go lower, but the thing here is the volatility. The open interest is high, but if we look at the actual, it's not much moving the last 9-10 days. Okay, so you can allocate your capital in a smarter way to other trade ideas and wait for better volatility momentum to get into the market, so then you can actually trade GBP CAD. But my view here, it's most probably that we continue down. Aussie CHF. Aussie CHF. Yeah, not much a clue on here. That was a good trade. Oof. Yeah, not much here on my side. CHF pairs are not my forte. I would say that it's, you know, my special point. But just, you know, getting together, let's put our brain to think a little bit. What's the analysis on the Australian dollar? It's going to be weaker, right? What is my analysis on CHF? That from all of the G10, CHF is always the chosen one to be a safe haven as Japanese yen and as US dollar. What are the moment of economic that we are uncertainties? What is the only certain that we have? That the central banks will lower interest rates this year. How is the interest rate on Switzerland right now? It's very low. How is the inflation on Switzerland right now? It's very low. It's 2%. Okay. Therefore, when I have those cards on my hand, I just, you know, put everything together. Like, okay, so we have a lower, so we have a weaker Australian dollar, a possibility to have a stronger CHF. Therefore, I'm looking to short it, but with cautions, because no volatility yet on the market. Okay. Same goes for CHF JPY. We get CHF JPY here pretty quick. We can see that the prices are rising, but here it's different. Okay, that's a completely different point, because we do have the Bank of Japan involved on the board as well. So yeah, so therefore, you know, a tricky one here, but most probably that will continue to go higher, at least somewhere this low, these highs here. What else? UP CAD, Aussie CAD. Yeah, good. Any more questions? Did I help you? All good? Not a problem, Kumalo. Awesome. Let's have a look. Only one thing here. Aussie CHF, so you know. Between the Aussie pairs, Aussie dollar is the one that has bigger, you know, chances of moving around. Aussie CHF is the second worst one to trade at the moment, same as Aussie JPY. The best ones to trade are Aussie CAD, Aussie dollar, and yeah, that would be it. I'm not touching Aussie New Zealand dollar, but between those two, yeah. And then here, Aussie CHF, as I told you, you know, a majority retailers are long, short only 39%. Now, if we look CHF JPY, %75% of retailers are short, 25% retailers are down. This is a good actual explanation what just happened on UVP CAD, because if we look here, very similar, very similar. All right, let's do the analysis here. Maybe I take a trade down. Okay, here, so where we went down and then we went up, and now we broke this. Okay, so let's count from here. So here, and then down and pull back, and then break down, and then now we had a break. So feels like, you know, the prices can't moving higher anymore. Therefore, what it may happen here, it may, you know, retrace back to this area here. And if it retraces back to this area, 105 times 6, that's going to be 640, sorry. If we get somewhere on here, 640, all right, somewhere on here. So minimum 1.8, that's going to be on here, but we have those highs, so let's extend a little bit. That's a good 2.3% trade. Okay, so I'm going to be watching this trade actually. Feels like to be a good one. Okay. All right, guys. Hope I helped. Any more questions? Yeah, have all a great weekend ahead. And I'm going to send the Telegram link. See you on YouTube. See you guys. Have a good weekend, and I'll talk to you next Tuesday. Bye-bye.